Hello and welcome to Gold and Silver Assets. It's Sunday the 27th of September 2020. And we had a great viewer's question about the seasonality of the gold price. When is the best time of the year to buy gold, silver and the mining stocks? Before we dig into that, we do need to know why seasonality occurs in the first place. The first thing to note is that if we ignore the paper contracts, physical gold trading is driven by supply and demand. The mining supply of gold is usually pretty steady throughout the year, although remember that this year has been somewhat of an anomaly. Demand, however, does vary throughout the year for a variety of reasons. One is that festivals are held at specific times of the year, such as Chinese New Year, for instance, in February. And in Eastern countries, gold is bought in large quantities during festival time. Portfolio rebalancing occurs at specific times of the year. And of course, tax selling can particularly affect things like the mining stocks. This is a chart showing the seasonality of the gold price based on data from 1986 to 2016. It covers a long time span, and the good thing is it covers both bear and bull markets. Now, the numerical values aren't very important here. What we're really looking for are the directions and the peaks and the dips. So it's more the shape of the chart rather than the actual numbers. From this, we can see that the weakest times are late March over here. We've also got a particularly strong dip in around mid to late June, and around here it's kind of pretty sideways, but then there's quite a large drop over here in around late October there. There's also a bit of a dip here coming up just before Christmas time. The other thing that you'll note is that we've got two big run-ups in price. One is from January to kind of late February, early March. And this is a huge run-up here from June up here and mainly up until mid-September here. Okay, but this doesn't include data from the run-up that we've had recently in the gold price in the last couple of years. Remember, this only goes up to 2016. Does that actually make a difference if we include things like that? This chart uses data from the last 24 years and does include 2020 data. And we can see that the overall pattern is actually still pretty similar. We've got two big runs up in price. So this is the one from January and this is the one from July. And the best buying points again are around mid-March over here. And this one here kind of comes into early July, really. And there are also some potential good buying points in late October and mid-December, because you've got this kind of downwards movements here. So here I've written a summary of all of that, and that's going to be useful for your reference in the future. So overall, the best months to buy gold are late March, late June, late October to mid-December. And the best months to sell gold are late February and late September. What about silver? Well, this chart does look quite different to the gold chart, doesn't it? And so maybe that's because silver tends to be more influenced by industrial demand and less by festivals compared to gold. Let's have a closer look at that. If we look at this chart, which shows the seasonality of the silver price from 1986 to 2016, similar to gold, we can see that the biggest price rises occur from January. And interestingly, though, it doesn't really stop in late February like it does with gold. It keeps going right up until kind of late April, early May over here. And again, from late June, again, prices rise and have a run up there. And if we're looking at the weakest times, which means the best times to buy silver, the weakest spots seem to be late June and late October. So that's interesting. That shows some similarities to silver. If we look over a longer time scale, so this actually covers 69 years, it becomes even more apparent that the best times to buy silver are, again, late June over here, and this kind of late October to December time, and that just precedes this big run-up that occurs from January onwards. Again, here's a summary for silver for your reference. And interestingly, it's actually pretty similar to gold. So the best times to buy silver are late June, late October to mid-December. And the best months to sell silver are late February and late September. What about the gold mining stocks? So in blue here is shown the seasonality of the gold price, and we already saw that chart earlier on. Remember, this covers 24 years and does include 2020 data. And in red is shown the seasonality of the gold mining stocks. So in this case, it's the HUI index. And isn't it interesting that the directional pattern is pretty similar to gold? But the interesting thing is that it's affected quite badly at the end of the year, much more so than gold is. The biggest drop seems to occur from October to December over here. So interestingly, it looks like we're heading into bargain season as far as the mining stocks are concerned. Another way of looking at this is to look at the average return per month, and this chart shows in green and purple the XAU and HUI mining indices, and we can see that the biggest loss occurs in October. And again, this fits in with the last chart, in which case that suggests that November is a good time to buy these stocks after they've had their big drop. Of course, individual mining stocks will behave differently from the mining indices themselves, and so remember that this only provides a generalised guide. Here's the summary for the mining stocks. So the best times to buy would be mid-March, late July and November to mid-December. And the best months to sell are late February and late September. So again, pretty similar to both gold and silver. But some of you might be saying, well, this year is different because it's a presidential election year. Well, we can account for that in some ways. So this chart is, again, a seasonal chart of gold over the past 45 years, but it's been filtered for US presidential election years from 1971 to 2016. And the elections are usually in November. And we can see here that prices tend to drop in October, and then just before the election it tends to rise. And will the same occur this year? Well, I think it's fair to say that this year we can expect uncertainty and turmoil, and those are the ingredients for a higher gold price. But let's see what happens. Historically, though, this suggests that we can expect a rise into November. So overall, we can say from this whole presentation that there are good times to buy gold and silver. Generally, the best times seem to be in the middle of the year and towards the end of the year. So it looks like buying opportunity may well be coming up soon. Next up, the market update. Let's start with the US dollar index, and this is on the daily scale, and we spoke about this last week, and I was talking about this descending broadening structure, and I felt that this was going to break out upwards, partly because this trend line here, which I'll talk about in the next chart, is a very strong support line, and the price never closed below it. It did try and poke below it over here, but then came straight back up again. And the other thing that I had noted was that we had reached this 50% retracement over here, and that had held. And so I was expecting an upwards breakout, which is exactly what we got. Over here, where we are now, is a place where we could have a pullback. The question is this going to turn back down and break this trend line? I don't think so, and I'll tell you why in a moment. My feeling is that we're going to go up a little bit more, probably at least to 96. Let's go on to the same chart, but this is on the monthly scale, and this was my longer term chart draw. So the black lines are my draws, but someone in last week's video had mentioned that others had actually drawn the trend line as shown in red. What's happened here is that they've connected the lows here that were in 2018 with the lows in 2014 here. But the problem I have with that is that it doesn't include these lows here from 2010. And now that doesn't mean it's wrong, it's just a different view. What I had drawn was connecting these two lines, and the interesting thing was that that had held as support. So now we've got 3 touches, which to me makes that a more kind of important trend line than the red one. But look, I could be wrong. One of the things that we can notice here is that price has bounced off of my trend line, but has just hit that red trend line. And if the red trend line is correct, then what we could expect is for price not to break through there and actually turn around and break down. But as I said, I just don't think this whole pattern is ready to complete yet. So I'm actually expecting a bit more upside in the US dollar. Anyway, so that's my reasoning. Now remember that with charts, one of the mistakes that certainly I made when I was starting out, and I think it's quite common when people first start with the charts, is in thinking that it's an objective thing. It is objective in the sense that it's a map of prices that have occurred in the past, but it's the interpretation that is not objective at all. Mine is just one of a sea of different opinions. If you ask 100 people what their interpretation of this chart is, you'll get all different kinds. You'll in fact get 100 completely different interpretations, I would say. And you know, some people might draw lines diagonally like this, people can draw triangles and so on. And so it really is an individual thing. You only need to go and look on the ideas section of TradingView just to see how many different opinions there are of a single chart. And you're always going to get a mixture of bearish and bullish scenarios. And that's what makes up the market. And so at the end of the day, you just got to go with, you know, what works for you. Let's move on to gold priced in US dollars on the monthly scale. Now, the monthly bar hasn't quite finished yet, so I'll talk about this one in a lot more detail next week, I think. But what I wanted to do, we've got this rounded formation over here, and in a previous video I had looked at a couple of other examples of these rounded formations, and I looked into it a bit further since then, and I've come up with something that's potentially quite interesting and could be quite useful going forwards. But I've only got a handful of examples of these formations, and so I would like to enlist your help with finding some more examples of these, and the rounder the better. So I'm not really looking for kind of V shapes or W shapes. I want them as round as possible. This is pretty good rounded shape here. And ideally, but it's not essential, but you'd want price to be coming up towards this before you get the rounded area here. So if you know of any examples, it can be on any time scale, that doesn't matter. And if you could put the ticker symbol, the rough date of where the bottom is, that I can find it, and the time scale that you're looking at. And if I get enough of them, then this week I'll go through and analyse and decide if the idea that I'm thinking of is going to be valid. With the handful of examples I looked at, it looked pretty compelling to me, but we've got to test it out for sure. And so if something does come of it, then I'll talk about it in next week's video. Anyway, as going back to this chart, we did have a drop, quite a significant drop in the gold price, which we were expecting. And we'll just recap why we were expecting that, because I know that there were a lot of people bullish once we got above the $2,000 level. And so just more of as a learning point to recap. So the first thing was we had this indecision candle over here on the monthly scale, which had long wicks and just a very small body in the middle there. The other thing was that we'd broken out of a significant high here. And often when that happens, you do get a retest. And the other thing was we were looking at the RSI, which is as high as it has ever been. And previous times that it had got that high, price had dropped. And so those were the clues on the monthly scale. Let's look on the weekly scale. And the clues that we had here were that we had this bearish engulfing pattern over here with these two candles. And of course RSI was pretty overbought over here. So when we get this bearish engulfing pattern, that kind of signals that we've got more downside here, which is what we got. The only problem with this is it doesn't really tell you the magnitude of how far down it is. And so that's why I try to use a combination of things to try and put things together. And let's look at US dollars on the daily scale. And the clues we had here were this squeezing of price, forming what appeared to be a triangle. The problem we had was knowing where the top of the triangle started and where to draw the trend line. And, you know, it's pretty common to start the trend line up here. And then, of course, we'd have been faked out with breakouts, whatever we joined up. But actually, I think the top of the triangle was here. And we've got this formation here. And then the other thing is, where is the bottom of this triangle? Again, it's very subjective. What I was using was this long-standing trend line, which had held for quite a long time. And when we first broke below that, that made me suspicious that we were going to go lower. And the other possible interpretation of this could be a descending triangle like this. So it's kind of a bit in the eye of the beholder, really. When price did break below this trend line, you could see that price was trying to break out above it, but it was just really struggling. It's a bit like in the movies where you see someone who's just kind of fallen off the edge of a skyscraper and they've just holding on by their fingertips, dangling down there. And so here we're just holding on by our fingertips, and then the big boot comes, stamps on the fingers, and the guy falls off. Anyway, that was my interpretation of that. Okay, so I know that a lot of you have been wondering whether this is as low as we can go. Can we really go further? One of our viewers asked that. My feeling is that we still got to retest this zone over here. I think we'll probably retest either the top to the middle of this zone at some point. What I think will happen is that we'll faff around this area for a little while. It could be, you know, it could be a small thing and then we fall down, or it could come up, retest this before coming down. But I think that's still likely. Why do I think that? Well, one of the things is if we look at the height of this triangle, then that suggests further downside. So the height of that would bring us into this zone, the top of this zone over here. Let's move on to look at silver in US dollars. again, we'll zoom out and look on the monthly scale. And what were the clues that made me think we were going to have a red candle here? Well, remember we were counting these candles, and once you get past 4, it starts to get a bit more stretched, and you've got to start expecting red candles to occur. So here we'd had 5 candles. I think the record had been 6 or something close to that. So, you know, even if we did have a green candle, then we could expect a red candle coming up. So that's one thing to look out for on the longer time scales. Certainly in this bull run here, we had 1, 2, 3, 4, 5 before getting a red candle for a break and then resuming upwards. And the other reason that we were expecting something to happen around here was because of all this price action over here. So this was a resistance zone, and initially we had bounced off the lower part of the zone, but actually price just broke through there, but it just wasn't strong enough and it turned back down again. Now, I'm not bearish about silver though, even though we've got this big red candle, because remember we've got this 6 or 7 year base over here, and that's going to be very, very strong support. And so this is the line over here that I would be looking at as the lowest possible likely price that we're going to get. Why did I think gold and silver were going down? Well, another clue was this big parabolic move that we had. Now on the daily scale, it doesn't really look particularly parabolic, but if we look on the weekly scale here, this is classic for a parabolic move. You see these tiny little bodies here of the green bars, and remember they're all green, and just the shape of it, it's got a lovely curve to it, and then it goes vertical. So remember it's worth looking at these on different timescales to see how these look. But that to me is a classic parabolic move. And those don't happen very often, but when they do happen, and I've spoken about this in a previous video, you can bet that there's going to be some punishment to follow. And of course, there was an initial sharp projection downwards, and that's pretty common, and then price often bounces back up and then it comes back down, and you usually get a 60 to 70% retracement of the rise. So if you count from here to here, then we have actually had, I think this is about 60% retracement of the price. So it's actually hit its target in terms of the lower level, although it could go even further. So 70% retracement would bring us down to around the $20 range, and that's still within possibility. The other thing we've been looking at in terms of how low price can go is this upsloping trend line, which has been there since March. The interesting thing here is that price has broken below that a couple of times, but it hasn't managed to close below it. And that's what we want to watch for. If we get a close below that, then I think we're going down to 21.20 and at the most over here, because this is going to be very strong support at around $19.50 roughly. If this trend line does hold and we can stay above here, then I think price is going to faff around here for a little while. I don't think it's just going to shoot up straight away, certainly not in October. So I think we've still got a few weeks of uncertainty here in terms of the price. If price does drop down to here, again, I think we're just going to be moving around this zone here for a little while. And this is the gold Miners Gdx on the daily scale. And we have this lovely triangle here. This was very well formed. Prices dropped below that, and we're getting a little retest possibly. So this could actually go back up to fully retest here. Notice that we've got a gap above here, but also we've got multiple gaps below. So some of those have already started to get filled. The main one is here, and we've also got another one down here. If we look at the height of this triangle, then that will give us an estimate of how low this could potentially go. And again, this all fits with another dip in the gold and silver price, I think. And so anyway, so the target here is this line over here, which is at around the 32 level. And that kind of fits in roughly with the height of the triangle there. So price may well bounce off of here, and we may just end up ignoring these gaps. We've got another one over here as well. If price does go below this, then I wouldn't expect it to stay down here long. It would probably just kind of come back straight up again. But yeah, I think once you get to around here, then start thinking about upper moves. I think the downside would be limited from there potentially. And looking at silver, again on the daily scale, and we had drawn this long trend line, and last week I was skeptical that that line was going to hold, just because we'd broken through it a couple of times already, and again we had this triangular shape. And I was talking about a target of about 11 or 12, I think, and we're already moving down pretty rapidly here. So again, so target of 12 or possibly 11 is possible for the silver junior miners. We've had a few viewers comment how they can tell that I'm really into gold and silver, and I was thinking about that, and apart from the obvious in terms of investment and jewellery, I can think of quite a few little stories and examples of gold in other aspects as well. So I'll share one of those with you. A few years back, I was in South Korea on a work trip, and there was a dinner that was held, and we were served dessert, and the dessert actually had pure gold leaf on it. Of course, I really enjoy dessert, so I polished the whole thing off. And yeah, I've actually eaten gold. Anyway, if you enjoyed this content, don't forget to hit the like button. Those that are new here, feel free to subscribe, and don't forget to hit the notification bell. And those who want to support the channel further, click the join button. Anyway, I hope you're all doing well. That's it from this week. See you next week. Bye.